All right, folks, welcome back. This is our Friday weekend commentary. So there will not be a video this Sunday. As a reminder, I'm trying to do this so I can preserve my personal time on the weekend to spend that with my family. So I'm still seeing people commenting and emailing, where's Sunday's video? There is explanations before the fact, and I'm reminding you again. I'm trying to have a life too. This is going to be really short, straight to the point, because it is the weekend, it is a summer month, it is summer volume, and I don't have a real strong conviction one way or the other, but because I have to co-sign every single time I sit with you, I'm going to state that I do believe that as it is right now, the dollar index should still potentially challenge this old high. So I'm going to stick with that narrative until we trade below this low on a closing basis on the daily chart. Now, why a closing basis on the break of this low here? Because we would have completely given back all of this rally off of this volume imbalance. And if it trades below that, then we're probably going to be working towards here. And then if it accelerates below there, then we have all of this to work with. But for now, I'm going to stick with the underlying narrative that they are pressing dollar index to try to get up in here and challenge that old high. All right. Mean threshold of the bearish order block here. That's what this blue line is. The two gray lines. The uppermost is the premium high of the volume imbalance and the discount low of the volume imbalance. Three levels there, okay? Dropping down into the hourly chart, you can see we had market trade up, making a higher high, then breaking down, rebalance with a bearish order block, displacement. We have a sell-side liquidity pool right in here that eventually it traded down into on Thursday, and then rallied back up in to attack some of this sell-side imbalance, buy-side inefficiency. Overall, the market structure still indicates to me that it's still likely to go higher, and again, unless we do on a closing basis lower than this low, that's what I'm going to stick with. 15-minute time frame dollar index, sell side imbalance, buy side inefficiency, breaker here, as I mentioned earlier in the week. Market consolidated, dropped down, ran the sell side liquidity pool as I indicated on the hourly chart, and the sweep of the discount low of that daily volume imbalance. Traded back up to the premium high of the volume imbalance, worked that level, see how it's consolidating around there, and hanging towards this level here, but not really making any headway higher or lower, just gravitating around that level. While I do believe it's likely to continue higher, it's still uncertain. There's nothing that it would give me a go in there on Sunday or go right in there on Monday and do, a long dollar short foreign currency. I don't have that conviction yet. It's the bias I'm going into the week with, but nothing in here I can work with in terms of a trade. And moving right along into Eurodollar. Eurodollar's been trading in its weird little consolidation, but going lower. I still think that we're going to sweep this over here like we did on cable, but how much of a time window do you have to sit and wait for that to occur? The market can stay in these weird consolidations longer than you're willing to be comfortable waiting for it, the breakout, right? So while that's just the expectation, I'm holding this whole thing unravels if what we've seen on the dollar explanation, in other words, if it breaks down, then we would likely try to work towards a run higher on euro. It just looks too heavy in euro right now. It doesn't make any sense for me to see a rally in here, and it just makes perfect sense for it to go down and clear out that 116 big figure, 116.20 institutional. Hourly chart, euro dollar. Two consecutive down close candles. This is your breaker. High, low, higher high. So this entire range that's being shown here, the premium high, discount low of the bearish breaker. And then we had the buy side liquidity pool resting in here. And you see the market run up into that. And then traded down, rejection block, then weird consolidation, trendless day, chop, basically. This is summer trading. Okay, this is what it's like. Ultimately, making another run below here, relative equal lows, and then sweeping that on 2 occasions, then back inside the daily range. On the 15-minute time frame for euro dollar, you can see we traded up into essentially the mean threshold of that bearish breaker. Buy side liquidity pool, which is this heavy line here, it swept that and then traded lower. You saw me actually trade that and engage that live. Swept below here and consolidated. Eventually came back up and hit my stop. Bearish order block. Trades up into that. And notice it's the midpoint of the open to the low. So consequent encroachment of this tail. Split that in half. That's what it hit. Broke down. Bearish order block with a fair value gap. Trades lower than this short-term lows here. Trades back up in for a New York session short or a scalp bread and butter. Trading down into this old low, which is what it swept. Find the lowest close. There it is right there. So there's your rejection block. Extend that out in time. So shorting at a bearish order block, fair value gap, New York session, optimal trade entry, and reaching down below the rejection block here. Okay. And then back in consolidation, rebalancing the SIBI and doing nothing much more than that. And finally, the British pound versus US dollar daily chart. We have a bearish order block, which we traded back up into on Thursday. We attacked the sell side liquidity pool, as I was indicating, leading into this week. Beautiful delivery on that. And snapped back up in, rebalancing all of the sell side delivery. Bearish order block, this level here will be the red level, and the blue level is the relative equal lows over here. So when we drop down lower time frames, you can keep your bearings in terms of what we're referring to there. I do suspect that this market will probably consolidate and allow Eurodollar to catch up with what it has done with its relative equal lows untapped. I'm looking for this type of maneuver here on Eurodollar. So cable, it could be reasonable for it to stay in consolidation between its low here and high here. So it can consolidate in that range, be listless trading, not really doing anything, and then allowing Eurodollar to trade lower in sympathy like we've seen here on British pound versus US dollar. Okay, the market sold off this week. On Tuesday, creating the low of the week. Nice little buy on Wednesday. Thursday, continuation up into the bearish order block. And then Friday, just consolidating, not doing much in terms of upside or downside. I like the fact that we traded back down into this old fair value gap here, and then we rallied. We have an imbalance there. We traded it into twice, and we have kind of like a sloppy relative equal high and the bearish order block that it could trade a little bit deeper into. So, like I mentioned, the range on the daily chart, which pound dollar can trade within and not really do too much of a move higher or lower than that. Now, I could be wrong and it could blast off either higher or lower, but my expectation going into this week is they'll try to keep that pair, or this pair particularly, pound versus US dollar, inside that range on the daily chart, thus allowing Eurodollar to catch up with what has been delivered on the downside for cable. So nothing in a sense of a clear, this is a trade for cable. I don't see that. So I'm going to focus primarily going into this week still with Eurodollar because I think it has unfinished business with its daily relative equal lows. And then finally, British pound versus US dollar on a 15-minute time frame. Old fair value gap here, which we look past this. This is a run on liquidity. So when you receive these types of trading maneuvers in price action, block all that out. Consider that as not actually being there because it's already done the work. So what does it take us back to? This fair value gap, which is what we traded to in here. So we traded down in, running out relative equal lows, snapped back above, relative equal highs. There you go. There's a bread and butter trade there. And you can study that on a 5 and 1 minute chart. There's lots to mine in that fractal right there. Like I said, I like the idea that it went to this low here and inside of this buy side balance, sell side efficiency, consequent encroachment essentially. So I'd like to see it trade higher to study, not to trade it, and see if we can run out these relative equal highs. And then I would expect to see it stay in the range I outlined on the daily chart. And that, my friends, is going to be it. Short, simple, sweet, right to the point, and not as clear as you probably wanted it. I gave you some really good stuff this week, and I shared you some examples of using the things that you learn here, the higher order things that you'll learn. On Monday, I'm actually going to break down how mentorship content can get you to the trades that I did yesterday. Now you're probably saying, why don't you do it here? Why don't you just fill up this weekend commentary with that? Because I'm expecting probably not being able to do much on Monday. So I'm saving it for Mondays. So either I'm going to show you something I did live with tape reading or a demo trade to illustrate something on Monday, or I won't have that because it won't be anything for me to do, and you'll have just a lesson. So either you'll have a price action lesson with a mentorship level breakdown of what I showed yesterday, just using interbank liquidity and no order block, nothing, just essentially trading on the standard deviations and using the underlying narrative. How I created the language in this mentorship to close to what I used in the trades that I took in the recording from yesterday. That's going to be the teaching that starts off on this week on Monday. So at best, you'll have a video with me teaching something on Monday's price action and the review and content level description and breakdown, if you will, using a mentorship perspective on yesterday's price action. Okay, so that's going to be it. I will touch base with you on Monday. Be safe. Enjoy your weekend. I'll talk to you then.